Good morning, investors and traders. It's going to be a pleasant morning, I believe, because stocks are going to rise. On Friday, it was a kind of a tough day to end the week on. A lot of stocks did sell off on the news that President Trump was going to use tariffs again in his negotiation with China. And over the weekend, he tweeted and I think made investors more comfortable that, hey, he's going to be, or I should say, the U.S. China relations are going to be fine. And then he actually had some more of softer messaging around China that his intent is to help China be successful versus this big battle that it was going to ensue, and that is helping the market rise this morning. The S&P is up 1.15%. We're 30 minutes from the market opening. So we'll see where the market goes. It's a market that's moving on the news around tariffs, because it could really change the amount of commerce that would happen, especially, we just do so much with China. We import so many of their goods. And I'm imagining that a lot of the importing for the Christmas holiday is getting done around this time, right? All the big box retailers and all the merchants on Amazon are bringing in that inventory in the month of October, getting it ready, because really right after Thanksgiving or even before Thanksgiving, the big sales go on. Like everybody wants to buy gifts for their loved ones, or maybe it's just a routine that, hey, we buy a lot of stuff in the month of November, month of December, and then return some of it in January, and pay our credit card bill in February. So that's what's going on high level. I am joined by my colleague, Darryl. How are you, Darryl?
Good morning, Victor, and I'm doing wonderful. It's good to be here. Hello, everyone.
And any reflection on the stock market and what we've seen on Friday and what we're seeing this morning?
Yeah, I did share a video on that yesterday. If anybody's interested, it's on my YouTube channel. But this was definitely a pretty significant pullback compared to what we've seen um, since about July. We hadn't had a pullback of that magnitude since April 3rd and 4th, where we had a little bit over a 5%. And then on March the 19th, I think we had 2.71% pullback compared to the 2.71 that we had yesterday on the Friday on the S&P. So it was a pretty significant pullback. We did drop down below the 20-day moving average and actually came pretty close to the 50-day moving average, which I shared some of my potential targets in that video that I made yesterday. I'd actually prepared those last Thursday in preparation for our live stream on Friday and never did share them. So
Oh, no.
I apologize for doing that, because it would have been very apropos on Friday. But
Yeah,
anyway, you can watch that video and check out my thoughts.
perfect. So on days when, you have such a red day, and I don't know how long this is going to go, right? Or I don't know if we're going to have a couple more red days. I don't know if the news feed is going to get negative again. But I think a general question that I wanted to put out there is, so how do you trade? How do you invest when you see prices fall like this? A very, very quick fall. Does that give you opportunities? Does that change what you do?
The only thing that changed for me, and I did cover this in the video, so this will be a little bit of a repeat for that. Um, I suspected that we could have a tactical bounce higher, and I mentioned that in the video. It looks like we're going to get that today, but the market is very sensitive right now because it is somewhat extended. We haven't had any, except for Friday, we haven't had any real pullbacks. And if we do recover a little bit today, a 1-day pullback doesn't mean a whole heck of a lot. My portfolio tends to be pretty defensive in nature. I am a retired investor. I invest in income. And even in March and April, when we had the drawdown, my portfolio never went into negative territory. It stayed positive. So
Good.
I feel pretty comfortable. And even a drawdown as significant as April, that my portfolio is going to do okay. The one change that I made pretty quickly on Friday, I don't know if you want to share my screen real quick because I have it
Sure.
pulled up.
Go for it.
Based on the interest rate decline environment that we find ourselves in right now with the Fed, I have been using, I invest in a small cap, basically the S&P 600. So I'm invested in an ETF for that. And then as leverage, I have been investing in the TNA, which is a small cap bull 3 times shares. And this is a leveraged ETF. I don't stay in it very long, but you can see where I've bought and sold over the
Mm-hmm.
last few months, trading on the small caps because I think they were going to benefit. On Friday, uh, this had provided me about a 20% gain. But when this happened on Friday, it cut my gain in half. So I don't want to be in a leveraged ETF in a down market. If I'm bullish on leverage, I don't want to be there. So I just sold on Friday all of it. So I did not want to be in that position because it cut when you're leveraging,
Yeah.
your profits change very quickly. So I just sold and wait for a better day. Um, I don't know what today's going to look like, but that's really the only major change that I saw and that I made actually in my portfolio on Friday. And then one other one is I have a high yield corporate bond, and I trimmed some of that on Friday because if we went into a week long drawdown, then those bonds were going to get hit pretty hard because they are high yield. Pays about 7% dividend yield.
Mm-hmm.
It's not like they're not bonds in Johnson and Johnson and
Right.
Apple.
They're not high
They're
grade.
Yeah, they're not typically high grade, so they provide higher yield. So I trimmed that down probably 40% or so on Friday. Those are the only two changes that I made.
Mm-hmm. Yeah. Interesting. So the the big days when you see, drawdowns like this, and it's only one day, but let's, going back to March, April, the comments I'm going to make kind of apply probably more to the example earlier this year is the my feelings on a particular company don't change because the market decided to discount it. And my feelings about Amazon, which is a stock that I've been accumulating for really the last couple months, believing that the market is underestimating, unappreciating Amazon. I think Amazon has a terrific 5-year plan. It's intending on being the dominant player in cloud infrastructure. Well, guess what? You see so many stocks flourishing, these small caps like CoreWeave and Nebius and IREN. Well, the biggest company that provides infrastructure on the planet is Amazon. the biggest e-commerce company on the planet, Amazon. So the feeling, or I should say, my confidence and sentiment around Amazon did not change on Friday, but what did change was price. So I bought Amazon shares. And it's a very rational exercise. And I think on down days like this, and one day doesn't really test us, right, emotionally, but we got to keep our heads where they're supposed to be. We got to use our brains and not use our hearts. And it's just one day, but the sell off in the springtime was a very successful exercise for me, where I was able to buy more shares in companies I really wanted to own, and I've made money on those purchases this year. That's what I do when the market sells off. Is I've done my homework. I know the companies I want to buy. If the market offers a discount, I take it. And I'm a dollar cost average investor, but I've made it very clear over the last couple months on live streams and on my videos that Amazon's a stock I'm buying. I'm not buying Meta or Google because I own so much of it. But if I didn't own as much as I did, I would be buying those too. So it gives me an opportunity on days like that. I bought more ASML. It's not listed here, but that's a semiconductor stock. And it gave me an opportunity to buy some of these stocks that I want to accumulate. I bought some more into it. And I bought a good amount of shares on Friday. And I'm glad I did so, because it doesn't happen as quickly like this. But now looks like the market's going to raise prices. Like on Friday, big sale. On Monday, it's moving prices on up. It's like, wow, you have to be a very active shopper. Passive investors might sit back and say, well, I'm just going to kind of let this kind of smooth over time. And maybe, but you might miss an opportunity, especially like the one we had in 2025 in March, in April. That was a terrific opportunity where the market sold off S&P stocks by 19%, NASDAQ stocks by more than 20%. So I try to use the market's, I think, volatility in my favor. That's what I try to do. So moving on to the shutdown. So we have a government shutdown, and I don't know that it directly affects stocks a whole lot, but I think the argument that's ensuing in Washington is going to affect a few industries. And the one that stands to benefit is healthcare, because I think one of the main arguments that's holding back the agreement is that the Affordable Care Act funds that are targeted to help subsidize the Affordable Care Act are what the Democrats want, and the Republicans don't want to fund that. So that's the big argument. Now, if the Democrats get their way, that means that a lot of these healthcare payers and a lot of these healthcare companies are probably going to see more revenues. That's kind of a high logical kind of expectation. And you've seen that, I think, once one side started pushing back on, no, you can't reduce the spend on Affordable Care Act, these stocks rose. So I'm looking at that as the argument continues, or negotiation, I guess, in Washington, because I am invested in healthcare. Not necessarily because I think that the Affordable Care Act is going to be a success or failure or anything like that, but like many investors, I diversify. I have a lot of money invested here, but I also have money invested in healthcare. And this stands to really rally if we get the shutdown resolved and they continue to fund the Affordable Care Act. So I wanted to just kind of share that with regards to the shutdown. Any comments you have with regard to the shutdown and what's happening with your portfolio, or what you see is going to impact the market?
I think the healthcare issue specifically is probably negotiating. tool that they'll have to work through. I think there probably will be some level of subsidies, just from a political standpoint. I think they'll be there. Um, how long this shutdown is going to last? I think this is day 13. So we're getting pretty close. I was looking at the poly market this morning, and they've had to extend their betting profile out to greater than 30 days. So because we're almost to the maximum shutdown time that they have had in the betting choices. So, they're thinking maybe this is going to take up to 30 days. And I think the one in 2018 was the record, and it was 34 days. So it's going to be interesting to watch. I'm also in healthcare. Some of them have been doing pretty well and increasing since some of the political atmosphere had changed a little bit with some agreements that they had with some companies. Things have improved there. So it's going to be interesting to watch this play out, that item specifically, and then the economic impacts if this continues to go on for several more days.
Yep. All right. So moving from the shutdown, of course, this is the week really when earnings are going to start really happening. We had a couple last week, not to disrespect the companies that announced those. Those were interesting, but not market moving. But tomorrow, we're going to have some market moving based on JP Morgan's announcement, Johnson and Johnson, Wells Fargo, Goldman Sachs, BlackRock, CitiGroup. You've got some substantial market cap that's going to announce. So as I look to the week, and all this is going to happen before the market opens. So I'll be hosting the member call in the morning. So we'll probably have some good stocks to talk about. I'm going to get up early, and whoever of these companies provides financials, I can update my analysis on and share it with the community that is a member. And then on Wednesday, we have more announcements. ASML, which has been careful in their guidance. They've have guided with a little bit of uncertainty, and that's what's caused the stock to really sell off at times. But it's been flourishing for the last couple of weeks. It's been doing great. Bank of America, Morgan Stanley, Abbott, a healthcare company, a quite successful one, by the way, a pharmaceutical company that does quite well. Prologis, which is, I believe, in logistics. They're going to announce, and again, before the market opens. So a lot of stuff happening in the early hours this week. And then in the afternoon, we're going to have United. Following Delta's announcement, I expect the news should be positive. Kinder Morgan, which is in energy, they're going to announce after the market closes. It continues on into Thursday. We have TSM before the market opens, Charles Schwab, Marsh and McLennan. And they're not exactly an insurance company, but they do provide services that kind of act as big insurance for big companies that need to hedge or, take risk off the table. The Bank of New York, which is a smaller bank, US Bank Corp, which is a large regional bank, or, kind of a small, large bank, I guess. Infosys, which they do services again before the market opens, is when all the action is going to happen. So we're going to have some exciting mornings. If you're accustomed to drinking espresso in the morning, you may not need as much this week. You just kind of study these financials, and I think they'll wake you up. Any big highlights that you are watching this week with regards to earnings?
Well, I own Johnson & Johnson. I put out a video on them yesterday. CitiGroup I own, and I'll be putting out a video on them today. USB I also own. They report on Thursday.
Mm-hmm.
One of the interesting things I'm seeing on the two banks is they're trading somewhat weak going into earnings. Yet I expect bank earnings to be pretty positive this quarter.
So
So
I have a question that I don't know the answer to just off the cuff. Lowering of interest rates, does that help or hurt these big banks?
that should help them. They borrow on the short term and loan on the long term, so it should help them.
So their net interest margin is going to get better.
That's my opinion.
Okay. Okay. Very good.
But what's interesting, at least on Citibank and USB, I haven't looked at any of the big banks, is they're trading somewhat weak going
Mhm.
into earnings. But I think they're going to do quite well this quarter.
Okay, perfect. Let's dive into some banks just to kind of get our minds around banking. And I'm going to start with a chart that shows JP Morgan, Wells Fargo, Bank of America, and Citi. And when we look at the year to date, they're all in the green. Citi outperformed the other three. And number two looks like it's JP Morgan. And then Bank of America and Wells are down here at around 12.5%, call it. And so they have performed well year to date and they pay a dividend. So you can put an extra 2 to 3% depending on which stock we're looking at. So they've been doing well over the 1 year. The story's even brighter. We got Citi up 51%, JP Morgan up 44%, Wells up 37%, and Bank of America. So these rates of appreciation are quite attractive, very good. And again, they all pay dividends, which add a percent to 2 to 3%, depending on which company. So they've been performing. JP Morgan is one of the more expensive stocks. And I say that because their PE ratio is higher than the others, but their book value, price to book, that ratio is what I like to look at when I look at banks. It's the most expensive one. I owned JP Morgan for years and then sold it, um, thinking that I could probably get a better bank that has better uh, uh, book to value and better fundamentals. And that's what I decided to do a couple years ago. But these guys are the most valuable bank, $827 billion of market cap, revenues 163. These guys are the sentiment and confidence in JP Morgan is very high. And analysts think it's still discounted. But when we look at their book value, that's where a bank really is accumulating its value. And the book value is really jumped. Look at that, trailing 12 months, 122. But the last year, 116, 104, 90. So this is really, really nicely done by JP Morgan, increasing the bank's value. So it looks good. Looks good from that perspective. The analyst on JP Morgan, they believe that the stock could go higher. And this stock has performed well over the 5 year. And it looks like analysts believe their revenue is going to grow single digit, low single digit. And for some reason, the banks are seeing like a negative year in 2028. And I wonder what they're seeing. We're going to have a recession or something, but I'm going to leave that off the conversation because really I focus on this year most is 2026. They're going to grow by almost 3%. Their profits are going to grow by 4%. Their PE ratio will drop unless their stock price continues to rise. And I think these guys, their stock price should rise. They should do quite well. So that's JP Morgan. Let me cover Citi, and then I wanted to see if you might have charts on JP Morgan and Citi. So Citi is quite a bit smaller in market cap. You're getting a lower PE ratio. Also, the dividend's a little better. Analysts do think this one's also discounted by 5%. When we look at their book value, it's been expanding as well. Book value going up over time. We want to see that in a bank. You want to see book value expanding. If we see that contracting, then it's not going to be a pretty picture for the bank and the stock price. Looking at the forecast, analysts are kind of not quite in agreement. You have some analysts that are up at 129, some as low as 75, with a small discount of 5%. This stock has done well for the 1 year and the year to date. Small gains on revenue, 3%, but the profits are really going to explode. They've been exploding in 2025. They're going to keep going up in 26 and keep going up in 27. So their PE is really going to drop unless the stock price continues to go up. I think the stock price is going to continue to go up. I have a good value for CitiGroup. I own the stock and I've done well with it. So any comments that you have on JP Morgan and Citi?
And we'll pull up JP Morgan, which is, excuse me, one I don't typically follow other than very high level. But they're like Citibank, which I'll show you next. And if we look at USB, we're going to see something similar. You can see it that at the end of September, they have been trailing downward. The 20-day has rolled over. They're trading below the 20-day and looking like, depending on what happens today, I don't know whether they're up in the pre-market or what have you, but they're just barely sitting above the 50-day from the Friday's close. Notice the relative strength is below 50, so that's showing a little bit of weakness as they move into earnings. We're going to see that on the other two banks as well. The PPO is positive but declining. We did get a bearish crossover on right around the end of September, the first day of October, which the market had a pretty significant pullback. Not as big as Friday, but it was fairly sizable compared to what we had seen in September. Accumulation still looks good, and money flow is also still positive but declining. So let's go look at Citi. We see a very similar pattern. So they're trading somewhat weakly going into the earnings, and I haven't really gone and studied past earnings, but I heard at a high level that this is not atypical for a bank going into their earnings.
Mm-hmm.
The RSI is only 33, so we're getting very near to being oversold. PPO moved into bearish territory a day or two ago. Accumulation still looks really good. It has pulled back a little bit, and the money flow is currently negative. And then just because I'm familiar with USB, we can take a look at that, and you're going to notice a very similar pattern. So as they move into earnings, they're showing a bit of weakness, but I'm expecting the banks to have pretty good earnings this quarter. So we'll see if any of these declining prices reverse on the banks.
Very interesting. So yeah, banks tend to be a good barometer or information source on the economy because they are just economy driven. So that's also what we get when they announce earnings.
Yep.
And I'm showing my valuation on Citi. I think it's discounted by 27% because I try to get to a book value for the bank and what their target should be. And also combine the value based on earnings per share. So 27% is a good discount on Citi. Now, I own plenty of Citi. I've got a big position in Citi, so I'm just going to hang tight just because I have a big position. If I didn't have a lot of Citi, I would be buying more. I think their stock is Very good. If you look at price to book, it's a very good ratio. JP Morgan's the most expensive, but the least expensive is Citi. And that's why I moved from JP Morgan up to Citi. Mission accomplished. I made money on JP Morgan. Thank you. Appreciated JP Morgan. But I thought, hey, if I move to another bank, I'm probably going to keep riding an elevator higher. And I was correct. So I'm glad I did that. And on PE ratio, I think Citi's not the lowest. US Bank would give you a better PE ratio, but it's the second lowest. So I'm good with Citi, and I can't argue with anybody buying JP Morgan, because JP Morgan's like the stock that everybody respects. So I can totally understand that. All right, so those are the big banks that are coming. It looks like Tomas is on. Good to see you. I've got CL on the list. Tomas, give us a few minutes to get to it, and we're going to cover Colgate Palmolive. That's a nice stable stock. We'll take a look. All right, so those are the big banks that are announcing this week. We also have Johnson & Johnson. Maybe we can talk about that for a few minutes and see what these guys are all about. Of course, Johnson & Johnson is a healthcare company. The market just opened, and let's see if I can give you a refresh. Johnson & Johnson opened a little lower. Over the year to date, this stock's done terrific, 31.5. Now, it hasn't had a great 5-year. You see that Johnson & Johnson has been kind of held back. I think they had some legal trouble where there was some class action lawsuits. But recently, right, it's not about, buying a stock because the 5-year chart's perfect. Nope. There's opportunity. Johnson & Johnson's a really, really well respected company, and that never left. They did what was right? They worked with the plaintiffs on those lawsuits, and I think there was a settlement that was made. Now, the stock's really risen from 142 up to 189, so that looks really good. They pay a dividend of 2.74. So investors that like income, older investors especially, they really like the Johnson & Johnson name. Now, I don't own the stock, but I own their bonds because they have really good credit rating. And I'm glad I've owned their bonds because it hasn't been a fun ride for the last 5 years, but it has been a very good ride for the last year or so. The company is just a slow grower, single digits, but they do operate very efficiently, creating very good free cash flow and gross margins nearly 70%. That looks great. Profit margins at 25%, and then free cash flow yield of 20%. So these are really nice numbers coming out of Johnson & Johnson. Very stable company. Now, analysts, 16 of them cover this stock. They think it's fairly priced. And there's some analysts that believe it can go higher, some that could go lower, but on consensus, they think it's fairly priced. They also believe the company is just going to keep growing at 4%. I'm not going to argue with that. I think it's rational. And their profits are going to increase just a little bit higher than their growth rate. So that looks okay. So really trustworthy name, very stable name. What are your comments on Johnson & Johnson?
I shared a video on this one on my channel if anybody wants to take a look at it, but I'll share some of the highlights from that video. One is this 3-year range breakout. So for 3 years, it basically traded between 167 and 135. And then in July, we had the breakout. These are very powerful in my opinion. So I like watching for these kind of breakouts and buying into strength when they do that. And it's proved to be pretty good move on Johnson & Johnson. We also had a recent cup and handle with Johnson & Johnson where we had a very nice rise from January into March, and then we had a consolidation, formed a base, and then formed a handle, measuring down to the bottom of the cup. I got a price target of 193, and that was several weeks ago that I put that target on there, and we came within $1 of that, basically $1.58. So if we just look at their 1 year, let me pull them up and just take a look. They are trading above their 20, 50, and 200 day, which are all upward sloping. They are overbought on the RSI. They tend to, over the past year, it looks like they stay overbought for maybe a month at a time. We're a little bit more than a month on this one. So they may be due for a small pullback over time. We'll see what happens tomorrow when they report. The PPO is still really strong and rising, still rising at the moment. The momentum is. Accumulations at a 52-week high. The cash flow looks really good. So Johnson & Johnson is one that's actually showing strength as it moves into the earnings this week, where the two banks that I own and will be tracking this week, they're showing some weakness going into the earnings, but Johnson & Johnson is actually showing some strength. And I think they have an implied earnings move. Let me check here real quick. It's actually pretty low on Johnson & Johnson. The implied move is 3.3% in either direction.
All right. Good stuff. Thank you. And it looks like Tomas, please give Scott Bessent my regards for saving Argentina's account. I don't have any method of communicating with Scott Bessent, but maybe he's watching this stream and he appreciates the shout out. All right. So let's go to, it looks like Mike. Yeah, we're live already, Mike. Good to see you. Thanks for joining. And okay, so we want to move over to CL, Colgate Palmolive. And this is a safety stock. Colgate Palmolive. I mean, you might be brushing your teeth with Colgate toothpaste. You might be, I think Palmolive is that a dish soap? I forget what they make, but these are essentials. These are things we consume on a daily basis to take a shower, personal care, clean the kitchen, clean the floors, that kind of thing. So these guys tend to be very stable. They pay a dividend of 2.68%. And this tends to be, in my opinion, for an investor that is looking for safety, and or maybe an older investor that's looking for income. And really easy to get your head around this company, because their products are things that we consume in our daily lives. The stock has not been performing. While we see tech stocks just flying off the charts, we see some what I think are stocks that are overheated really fly up. You have these safety stocks, and specifically Colgate Palmolive, not do well. Over the 1 year, story's the same. Over the 5 year, you haven't done well. Now, let's say I was working with one of my sons. I have two sons that are in their 20s, and they were like, what do you suggest that I own from a stock perspective? It would not be Colgate Palmolive. I would want them to get into a stock that's going to do 15 to 35% rate of appreciation per year. And Colgate Palmolive is not fitting that mold. Now, if I was talking, to an investor about my age, 57 or 65 or so forth, hey, I can't argue with an investment like this, especially if you're catching it while it's been sold off and maybe it comes back. Today, it's not doing much, but right now, the market is up. The market's recovering some of its losses from Friday. So this one here, let's take a look. $62 billion market cap, revenues of $20 billion. P ratios seems a little high for a safety stock, and analysts think it is discounted. They're not growing in the trailing 12 months. In 2024, they grew a little bit, and the growth has been consistent. And looking at their gross profits, looks like their gross profits are quite good. They have 60% gross profits, and the free cash flow is consistent and good. Now I'm going to do a valuation. I'm not. I need to do it. So when I flip it over to you, and you go over the charts, I'll do the valuation. But I'm going to take this free cash flow number into that valuation. The profit margins are good. So these guys are just operating as they should be. The numbers look good, by the way. 14.5% profit margin from a very stable company. Very good. Free cash flow yield 16.8. Very good. Consistent revenue growth. Good. Analysts, 14 of them cover it, and they believe it's discounted. They think this company is being overlooked and is discounted. Now, the revenue is going to continue to grow. I don't doubt that. They've been growing year after year, just not a whole lot, and their profits are going to expand. Now, the whole tariff thing, I don't think it affects this company because they source everything locally, right? They're mixing. Let's say they have a shampoo that's being mixed by probably one of their suppliers. It's a bottler, and then distributed to Walmarts and Targets and so forth, or whatever store is going to stock their products to sell it to the consumer. So I don't think tariffs are going to hurt these guys at all. Forward PE is going to drop unless the stock rises. And the PE was a little bit high. It's a stable stock. So I'm thinking, I would probably want to see like a 15 PE, but that's just my wish list. So that's what I'm seeing there. Can you take a look at the charts on CL?
Yeah, this is a consumer staples stock, and consumer staples has not performed well when you compare it to some other sectors. So they're trading below downward sloping moving averages, the 200-day, the 50-day, the 20-day. The 5-day has turned upward slightly. Looks like they're trading down today, which is no surprise given the recovery in risk on trade today. I'm looking at the markets, and it's definitely a risk back on today. So staple stocks will not do well today. So they're also have an RSI that's been below 50, looks like since about July. So they've definitely been weak for several months. The PPO has been in negative territory since July. There's been a lot of distribution in this stock. You can see that by the money flows as well, spending most of their time in bearish territory here. They have underperformed the S&P 500 by 30%. The consumer staples, they're even underperforming consumer staples by 19. They're underperforming their industry group, which is personal products. And the personal products is underperforming the S&P 500. So generally they're in a decline. This is one, if it was of interest to me, that I would just continue watching. And if I added a downtrend line here, just so we can see where we're at. Could probably draw a few here. So one about right there, and maybe another one connecting to that point, and some of those highs. I'd be a lot more interested in a stock. Let me save this. just so I have it for future reference if we come back to it. Okay, so what I would like to see is it break above this downtrend line. When it breaks above there, your reward to risk improves a little bit. And to come out of this longer term downtrend, it needs to break above about 88. But I would feel fairly comfortable at getting in when it breaks above this trend line. So let me go back a little bit further and just, yeah, it did have a great run in 23 to 2024. So boy, that would have been for a consumer staple stock. It was up 61%. But we could actually probably draw some more trend lines down here and get another price point. But it's definitely been in a downtrend for a while. So that's my thoughts on Colgate Palmolive.
Well, thank you, sir. And I finished the valuation. And Colgate Palmolive is discounted by 20%. So I'm agreeing with these analysts, but I'm getting there through a different, path. I think their cash flows are good. They don't have too much debt, but their cash flows just growing at a very consistent rate of 4%, really for the next 4 years, and then terminal value growing by 4%. My discount rate is changing on all stocks. If it's a good company, 7.5 is the discount rate. If it's a superb company, I'll consider going to 7. If it's a riskier company, I need to add to the discount rate to cover that risk. But this stock is discounted by 27% if we look at cash flows. And if I look at earnings per share, again, I'm not going to give them anywhere near 25. A 20 is way too close to 25. Why? Because they're not growing 4%. They have good margins, but I'm going to give them an 18. And I think it's fairly priced if I go along those lines. So I get to a 20% discount. So is this an investment, for me, being 57 years old? Maybe might be a good investment, because I think it's going to probably rise in stock price over time. It's just going to rise to the intrinsic value of those cash flows, and it's going to pay dividends. So it's not a bad idea. Now, for a younger investor, again, if I was talking to one of my sons, I'd be like, I don't think you need to worry about companies like Colgate Palmolive for another 20 years. But everybody, make your own decisions. This is not financial advice. I've just wanted to share my research on it. And it is great to see you, Tomas. And I hope you have a good day. So we just covered Colgate Palmolive. If there's any other members out there and you'd like me to go over a stock, please put it in the chat and we can go over it. All right, so we covered Colgate Palmolive. I think there's an additional list of stocks that I wanted to cover. And before I do that, let me take a peek at the market. Now it's bright green now. We went from bright red to bright green. It looks like NVIDIA is just going up. Broadcom's going up. The whole semiconductor space is just on a tear. Google's up nicely, 2%. Meta's up 1.21. Looks like the software space is really catching a bid. Amazon up 1.22%. Tesla's up nicely. The financial space, going into those earnings tomorrow, if this holds, JP Morgan's doing well. Wells is doing well. Citi's up. So there's a lot of green to point out. Healthcare is not keeping up, but that's kind of expected if you have, risk on and these, high growth stocks are flourishing. Usually healthcare is being kind of left behind. Healthcare is a safer sector that investors cover. So that's what's happening on Wall Street. Let me move on to the next stock I wanted to cover. Later this
Looks like, excuse me, looks like materials are up too, which is somewhat interesting.
It is.
But
There is
that,
a
I think that has to do with what started the tariff discussions this past week was China's restrictions on exports of their rare earths. So there's a lot of investment going into rare earth companies for the U.S. right now.
yeah, and I think from what I've read, the negotiation is that China controls some minerals that are the rare earths and magnets and so forth, and those are needed for a lot of different products that the U.S. companies produce. And China has that as leverage in order to ask for things like technology, software, and semiconductor chips that will be provided to their economy, their supply chain, so that their Chinese tech companies can continue to do well. So that's been the negotiation. There is one company we can look at, MP Materials. Before I do that, let me say hello to Pedro Miguel. Great to see you. And DJ Stocks, you'd like to look at NVO. It is on the list. Give us a minute, and then we're going to get to NVO. Before we jump there, let's talk about materials. We got MP Materials that focuses on finding rare earth minerals, and they focus that here in the US. So their stock is flourishing 27.65% because if this is a domestic producer of those materials, they're going to do great. Over the 1 year, holy smokes, really, really just flourishing. Let's see if this one's worth, the stock price. If you have the whole China-US relationship deteriorate and you have China saying, well, we're not going to send you any rare earths, MP Materials would become extremely valuable because they're a local or a domestic producer of some of these minerals. Right now, their market cap's 13.87 billion, revenues of just 242 million. So investors are having to pay 60 times revenue, which is expensive. Forward PE 277, expensive. And analysts think it's priced too high by 17%. I'm surprised they're only saying 17% because the stock's just gone up big time. The revenues for the company, 23 was bad, 24 was bad. I'm sure that international competition from China is probably the reason why they probably couldn't compete on price because their exploration and extraction cost are probably just much more expensive than what the Chinese companies can do. But more recently, they've got a nice growth number going, 39%. Looking at the quarterly, last 4 quarters have been green. So that looks really encouraging for this stock. Let's see how profitable they are. So they have really, what is going on with margins here? How do they go from really high margins to really low margins? These margins are really, really low, gross margins. And then their operating margins are really bad. I guess they, for a while, had a mine that was producing really well, and now they don't. And they're just burning cash, losing money, while their stock price flourishes. So not a good combination. But the story is what's making this stock go higher. We have the U.S.-Chinese tension. This is one of the reasons rare earths, MP Materials was smart enough to get into this particular business, and their stock is flourishing. Now, some analysts believe the stock's way overpriced, and some analysts think, hey, it's just a little bit overpriced, but on average, 10 analysts are covering it. On average, they think it's priced 17% too high. And looking at their growth, they're expected to really grow this coming year by a lot. Now, do they have the mine capacity? Like, do they have like the right source of these minerals? I don't know. Investors should really look into that. My analysis isn't going to end up with a valuation, by the way, because I can't get there. No way. But their cash flow is negative. Their profits are negative, so I can't get to a value. But, some investors are really believing that these guys are going to be really worth it. So I'm not an investor. I'm not going to be an investor, but this stock's really flourishing. I imagine the charts are going to be a little bit unusual. What are you seeing on the charts for MP?
They have had a nice run. I looked at another chart and they look to be a fairly new company, but maybe not. Yeah, it looks like they IPO'd in 2020. So unlike a lot of other IPOs, they didn't have as drastic a pullback initially, but they did in 2022 pull back pretty severely. So let's go back to just 1 year. They're up 19% today based on that news. I put a 21-day exponential moving average on here instead of the 20-day simple moving. But I don't know if I would chase it today, but it is trading above that 21-day moving average. It's trading below an upward sloping 50 and an upward sloping 200. You can see that there was a level shift in the average daily volume starting around started in June, and then in July we had a pretty much a level shift. So I'm looking at the 50-day simple moving average that I have on the volume. You can see how the average has risen pretty significantly. They were overbought during these 3 months. They came back down to below 50 on the RSI, and now they're getting back into overbought territory today. The PPO is positive. The accumulation really shot up in June as well, along with the money flow. So the chart looks positive. I'm not for sure what I would do with it here because it is up 20% today based on a news cycle.
Yeah, especially if like the US and China, hug it out and all right, we made an agreement and now we're going to have plenty of rare earths for the next 10 years. This stock's going to plummet, I would think, because it's like, okay, you're back to the source that can produce a lot of this stuff, probably at a really good price. So that's what's going on with that particular stock. Looks like the market is having a very good morning. We're 30 minutes into trading. The S&P is up 1.48. The NASDAQ's up almost 2%. It looks like the investors are coming back. They went away on Friday and came back on Monday. All right, so the next stock up is a request by one of our viewers and a member of the channel. And I'm going to keep Johnson & Johnson open, but I'm going to start my analysis on Novo Nordisk. This stock is up 1.5%, which surprised me a little because this is a healthcare stock. So I would think if other stocks that are flourishing in tech and communication services and the data center, I would think that this one's probably getting fewer investors, but nope, that's not the case. Now, this stock's been beaten down 51.9%. Over the 1 month, it's been doing okay. Year to date, beaten down. This stock pays a 2.13% dividend. This is a pharmaceutical company and they are known for their obesity drugs. And these drugs have been proven to be effective. $260 billion market cap, and this is in US dollars. Revenue, 49 billion. PE ratio looks nice and low, 14.7, forward P of 15. The analysts believe it's really discounted at this time. Their growth rate has been good. They've seen competition in the space from all different directions, but they do have the best clinically proven, FDA approved weight loss drug, obesity drug that helps people with diabetes. And they are a global company. They're headquartered in Europe and sell around the world. The company has good margins. This is in the Danish currency. So these are not US dollars, but I'll show you my analysis, and it's based on US dollars. Gross margins are terrific. 84% is labeled terrific in my book. And profit margins of 35%. That's fantastic. And so those numbers look great. Just the sentiment around the spaces, are these guys under threat? Are they going to be able to continue to grow? And right now the market believes that, they're not. No, I happen to think they will because I think their drug is the best, clinically proven to be best at helping people lose weight, control their diabetes, that kind of stuff. And they also came out with an oral version, which is going to help people. So I'm actually believing in Novo Nordisk, and I'm an investor. I'm going to show their valuation, show you where I'm at with the stock with regards to what their value is and where I think the stock ought to be priced. Now, this is an international stock, but it's really well known. I'm going to lower my discount rate a bit. And I think it's a really nicely discounted stock. I'm agreeing with the analysts that it's discounted. The market will sell off stocks on stories. The story on Novo Nordisk is they're seeing competition, most definitely. And that's what's pushing down the stock. But the fundamentals, the weight of the value of the company is very good. So I'm going to hold my shares of Novo Nordisk. They're having a good day. And what type of investor do you think, or do I think is probably thinking Novo Nordisk? Well, it's probably an older investor that likes that dividend. It's also an investor that's kind of betting on the rebound. And what I'd be curious about, and I'll show it after maybe you show the charts on Novo Nordisk, is how many famous super investors are in Novo Nordisk? And are we seeing an increase of investors, kind of like what we've seen with United Healthcare? That'd be interesting to look at. And I'll look at that next. So that's my fundamental analysis of Novo Nordisk. Can you take a look at the charts, please?
Sure. We actually looked at this chart a month or so ago, and we drew these trend lines, which after we finish here, I'm going to change the color of these to red. I'm going to do downtrend lines in red and uptrend lines in blue in the future, just to give the indication of which direction, although it's pretty obvious. But anyway, we drew these trend lines. So we had one trend line. I'll also have to extend this out because it's been a month since we looked at it. But if I were to just extend that out visually, we're looking for a break above about 63 to reverse this downtrend that it's in. Then we have that downtrend started in September of last year, maybe even a little further back. Then we have a shorter term downtrend line that it has broken above. It came back and tested it, and it looks like it may try to test it again. I'll have to extend this out. It's actually further above it than it was. So if it can hold that trend line and reverse, that would be a really positive sign. I notice an upshift in the volume. Looking at my 50-day moving average on the volume, we had an upshift on the sell-off at the end of July. The RSI is slightly above positive in bullish territory. It's sitting at 50.57. The PPO is positive again after being in negative territory for a couple of months. The accumulation did start to improve here, but it's declining and moving back into what I call no man's land, which is between this lime green and red line. When it gets there, the money flow indicator is not very reliable. So that's kind of why I call it no man's land. So it's still it's still showing some weakness right now, but maybe the strength is improving. We can look at this trend line and it's definitely to the right, but it hasn't broken its downtrend yet.
Very good. So I looked up which super investors own Novo Nordisk, and we have a list of 5. Probably the one that I appreciate the most is Chase Coleman. This guy's really good. He's made terrific returns. And he doesn't own a giant position for him, right? It's $87 million of shares, and it's a very small position in proportion to his portfolio. There has been some ads and there's been some sells. It looks like Pollen Capital is selling out most of their position. But there are super investors that are looking at this stock and saying, hey, I'm going to buy. I think the sell-off has been overdone. All right. So that was Novo Nordisk for a member that requested it. Hopefully you found the analysis interesting. All right, I'm going to move down to Falls Grave. You want to look at JANX, and let's take a look at JANX. I thought I had open. Yep, here it is. So Janux Therapeutics down 3% today. Year to date, it's down 52% over the 1 year. Over the 5 year, it's up a little bit. It looked like it had a stupendous day, probably some type of approval happened February of 2024. Janux Therapeutics, a clinical stage biopharmaceutical company, develops immunotherapies based on tumor-activated T-cell engager and tumor-activated immunomodulator platforms, technology treatment for patients with cancer. Its clinical candidates include JNX007, a prostate-specific membrane antigen. So these guys are trying to help with cancer. A very small company with 81 employees. Let's take a look at their website. All right, so these guys are a biotech company trying to go after some forms of cancer. I'll open this guy up just to have it ready. Let's take a look at the fundamentals. This is a small cap, $1.56 billion in market cap. Revenue is 439,000. Okay, so it's tiny, like very, very small. They're losing a lot of money because this is probably some type of grant, unless they just went commercial with their drug, which is very important to know. I'm going to look at their financials to find out. Net income, which is a net loss of 105 million. They don't have any PEs because they're not making money. Analysts are really optimistic on this stock. 193% discount. I am curious to see what they're thinking there. So they were making some revenue, and I'm going to have to check their website to see if they have more news. but it looks like there's no revenue at this time for the last couple of quarters. So gross profit. And I see a cost of revenue, but what's bizarre is if you're not selling anything, why do you have a cost? So I'm going to look at their actual financials and see if I can figure that out, understand that better. So right now it's just big losses because they're trying to get a drug that is going to be commercially viable. Now I am curious. There's 11 analysts covering this stock, and they think that there's a market for the drugs that they are producing. Everybody thinks this is going to go higher, and some investors believe substantially higher. Let's look at their forecast. So this year, so this is where they think the stock's headed, is they will eventually become commercially viable and have revenues of 42 million, which is a small amount of revenue. 42 million. Their market cap's over $1 billion. So this is a long shot bet. I mean, the stock is, sold off, but this is risky. This is in their high risk zone. See how much cash they have. So they have 996 million, just a little bit of debt. So I think they have plenty of cash to operate with and get themselves to, if they have everything approved, get themselves to a point where they would be able to have more revenues, have more money coming in, and probably be okay. So the highlights, this was announced on August 7th. R&D day highlighted. Okay. So they're going to have updates on the enrollment ongoing. And what does this mean? Does this mean patients are enrolling to take the drug? So they're supposed to receive some type of payment from Merck. If they pull that off. I'll tell you what, do you have the charts available on this stock? Why don't you do the charts and I'll read their report, and then kind of when we come back, I'll give everybody the highlights.
Okay. Okay. Had to put in an order here.
Mm-hmm.
So I'm looking at their, this is 5-year daily chart. Looks like they IPO'd in 2021, and I added this support resistance line because it's very curious that it served as resistance in 2021, and it served as resistance in 2023. Then we had some magic happened here, and I hope you own this at that price because you did 467%, it looks like, in a day or two. That would have been pretty awesome. But then as we're entering into a declining period starting in December of last year, and look how many times it's tested this line again. 1, 2, 3, 4, 5 times. This looks like really fantastic support. And if you believe in what this company's doing, even though it sounds like it's a pretty high risk investment, this looks like a pretty good time to buy to me. So
Interesting.
let's step down to a year. So it is in a pretty steep decline. I probably should add some trend lines just to give us an idea. So I'll draw a trend line. Well, that's going to be really difficult to do. Okay, so this is that trend line to me isn't very substantial. I'm going to leave it there for the time being and then decide here if I want to keep it there. But this looks like a really good time to buy. It broke out above this trend line. We had two lower highs that I've attached this trend line to. And it did break above that, but it's breaking above it simply on a consolidation. So I could draw a box around here and I would see that we're trading around 22 to 28. And it looks like it's been that way for the last 3 or 4 months. The RSI is positive, sitting at 58. The PPO has just moved into positive territory. We had a bullish crossover and a bearish crossover in less than a day or two, but we are in positive territory. It's been in distribution for the past year, so we're not anywhere close to our peak accumulation over the last year. So there is a lot of room to run. If any kind of news happens, this one's going to go up pretty fast, as we saw happen earlier. And the money flow is spent most of the time in the negative part of the chart, and that's confirmed by the accumulation, which is simply a cumulative total of the money flow. So they are underperforming the S&P, underperforming healthcare, underperforming biotech, and underperforming the biotech industry is underperforming the SPY. So this is a bet, but this looks like a pretty solid time to enter. If you believe in this company, this looks like a pretty good time to me.
All right. Thanks for covering the charts. Now let me cover kind of timing, right? So this is their pipeline, and these are the principal treatments that they have. They're in phase 1. They got to go through 3 phases. They're in clinical stages, clinical trials. So we have a ways to go, maybe a couple of years to go before they would be allowed to commercially sell this if it's effective. So to me, this is not an investment that I would make because I just don't know this science well enough. Not a doctor, not a biotech engineer or scientist or chemist or anything like that. So I cannot establish an appreciation or a confidence level for what these guys are doing. The timing is what scares me. A couple of things that are risks are, what if they fail? Okay, that's a risk. What if patients develop adverse reactions to this treatment? That's a risk. What if their competition is ahead of them? That's a risk. So there's risks out there. Now, this could be a home run. It could be a grand slam. And I hope it is if there's any investors out there in the stock. But I don't invest on hope. It's like, what am I seeing fundamentally? I don't understand this science. If this company was operating in something that I have expertise in, and I saw that, hey, these guys are creating something that is of great value for the market, I might invest before they're generating revenue. But this one here, I'm glad that, Darryl has a particular point of view looking at the charts. I have a fundamental point of view, and I can't I can't value this stock on fundamentals because they're losing money, and there's no fundamentals to put into my modeling. So for me, it's not an investment I would make, but if somebody else is out there that understands this science, and you have a particular confidence level, then that might be a different story for you. I don't. So that's our
Genetic,
analysis on Janus. Go
yeah,
ahead.
Genetics Mike tells us he has somebody in the business, so maybe he can give us some feedback here in a little while, and we'll know a little bit more. I know Brandon is a medical doctor. Maybe we can hear from him as well on this one.
Yeah, and that'd be interesting to hear. Just the man, these companies with pharmaceuticals and biotech. I have one experience. I worked with a pharmaceutical device company, and we created a new drug, and actually it was a delivery system of a drug that would go straight to the bloodstream. And this is going back 30 years ago. So, you know, since then to now, I'm sure things have gotten better. And the amount of cost, effort that it takes to get FDA approval is quite significant and risky. We ended up getting to market, but if you looked at our projections, like when we were in like phase one, we were like, oh man, our addressable market is like 500 million. And then as our forecast continued to evolve, in that case, our costs were going up and the addressable market kept shrinking because some competitors were kind of getting into the market. So by the time we went commercial with that drug, it was 25% of what we thought it was going to be when we were, early on that cycle.
Where is this company headquartered?
In San Diego, I believe.
Okay. Not that that's terribly important, but one other thing, besides just their drugs and their pathway, these are always takeover targets.
I agree. Yeah.
So, yeah, I mean, this is something that AbbVie could probably reach into their pocket and pull out 1.5 billion, maybe add 500 million or even a billion. And they take chances like that. So I think in 2024 or 2023 they bought about 7 companies.
Mm-hmm.
One of them didn't pan out. They're still waiting for some of the other ones, but these are pretty rich takeover
Yeah.
targets.
Just the kind of high level, like I don't do the charts like you do, but to me, this is concerning that, okay, it was close to 2 years ago. Actually, it would be more like a year and a quarter ago. There was high hopes like, hey, these guys are really going to do something special. But since then, the hopes have kind of begun to evaporate. So if the science is there, why haven't they been acquired?
Yeah.
Why has the stock price been going down? So I'm not a scientist. It's not based on science. It's more observation that, hey, why are investors leaving the stock? It's a small cap, right? So if there's going to be potentially a big win, maybe this company goes up to 20 billion in market cap. Why are investors leaving? So for me, it's just not, I don't want to go down. I want to at least have a rational decision on the specifics of the company. And I just don't have the background to do that on this company. So it's not a bad or good comment on them. The one thing I would say is this would scare me is why are investors leaving? Is there lack of confidence? Is there something they know that we don't know? And we'll see. We'll see. So I like buying healthcare stocks like these once it's proven. Like, United Therapeutics, I like that stock. I like that they're already commercial and they keep developing other drugs. That development's going well, but hey, I've got something. They're a growing entity. They have lots of cash. I have something. Okay. I don't have to go to medical school to invest in United Therapeutics. I have great fundamentals. I went to business school and know how to analyze fundamentals. So that's why I invest in United Therapeutics. And I have to be careful because I don't have the science background on JANX. And I don't know, Fallsgrave, if you have more of a knowledge of the industry, but that's where we're as far as we can go on the analysis on this company. Thanks for asking and have a great week. And genetics smite. Yeah, this space is humongous. I mean, the pharma space is humongous. All right, so what's going on stock market? Let's see what's going on with the heat map. Looks like Broadcom is just flying off the charts. Google, Amazon, Tesla. All right, very good. GEV looks good. Looks like the market's recovering some of those losses from Friday. Looks good. And the VIX is coming down, which is very, very good. Okay, good. All right, we're humming along. I don't see any of the other requests from members. So let's go on a couple other stocks that I thought were interesting that are out there. And one of them is Oklo, which has just been going up like crazy. And this company wants to create a power generating device using advanced fission power. We just talked about a biotech company that is yet to have a commercially available treatment. Now we're going to talk about a company that has a technology that isn't commercially viable, hasn't been proven. It's just theorized. They have an idea. And that idea is worth $25 billion to the investors that bought into Oklo. I'm not an investor. And the stock's just gone off the charts. So I looked and no super investor, famous investors own Oklo. None of them. So this is all retail money. Retail investors saying, man, this thing's going to be worth a lot. And they're buying into it. What's interesting is these guys have zero revenue. All you'll find on their income statements is expenses. And they have administrative expenses. They should have research and development, I would think. And that's probably in here. So it's just expenses for now. What is interesting about companies like this is not having revenue and not having fundamentals, period, is somewhat of a benefit to a company because they don't have accountability. It's not like they told us they were going to have $100 million of revenue in 2025 and now they're coming up short. Nope. They're like, hey, got this idea. We think it's going to work. We're going to work on it. And now investors have to qualitatively assess, are they going to pull it off? Are they going to get there? Is it going to be successful? And back to the comment I made on that biotech company, I do not have the expertise, the knowledge to tell you if this fission power solution is going to work. Don't have it. I'm not a nuclear physicist. I'm a business guy and have expertise in software and some aspects of technology. This one is outside my intellectual domain. Somebody else would have to determine, hey, this is going to work or not work. But these This stock's been bought by investors, 25 billion. It has gone up. No revenue, just expenses. How much cash do they have on hand? They have plenty of cash, 534 million. All right. And I'm curious to see, like, what does each unit cost? Like, right now, of course, we have the one experience that I would note that I could apply here is way back when I helped a business develop a piece of software that was a product configurator, for those who know what a product configurator is. And this company was a pump manufacturer, vertical pumps. Now, it was used for, an example, the oil industry. You're pumping oil out of either a reservoir of some sort, and you're pumping that oil into a pipeline. You're pumping water out of a well, a deep well, pumping water out. And one of the key applications was they would sell pumps for water usage, oil, all kinds of different usages. And they would also sell into nuclear power plants. And these pumps would pump the water that would be used to cool the reactor. And the cost of, I'm gonna say the identical bill of material, but the qualification of suppliers, the quality, we had everything had to be X-rayed. The level of assurance that you had to have with that pump drove the cost of that pump like 100x. That's not an exaggeration. Somebody could buy like a pump that would cost $3,000. And if that was going to go into a nuclear reactor, it ended up costing $25,000 because you had to do so much. Back to this company. The idea is out there. Hey, we need the power. Okay, great. But if you're going to start messing with nuclear, atomic kind of conditions, the cost goes through the roof. And that would be one of the concerns I would have is these guys may be underestimating, you can't have any accidents. It's not acceptable to have one accident ever, right? You have one accident, you're done. And these guys are getting a lot of investment, which is, hey, we're in an expensive market. It's a lot of optimistic thoughts around data center, and data center is going to need power. But Oklo is going to have to compete against proven methods of generating power, like turbines that are being powered by natural gas. And that is a proven way that is proven to be safe. It could emit pollution into the air, but Oklo, they're going to try to do something that could also harm people, and it could be unexpected, and it could cause lots of harm. These data centers tend to be near populations, right? They're not like in the middle of Nevada where they test nuclear things. The biggest data center region in the United States, it might even be in the world, is in Northern Virginia. So it's near DC. It's near bigger populated cities of Northern Virginia. So if you're going to put this type of technology in the middle of a populated area, it has to be safe. There's no ifs and buts about it. So I think there's going to be a long, long time before these guys start making money, if they get to that point. And I will watch and see what happens. But if nuclear power was that profitable, why in the United States did we shut down so many power plants? Because they were expensive, really expensive to run. Here in California, we shut one down not too far from where I live. It was San Onofre. And the cost of that power per kilowatt hour was far more expensive than the traditional methods, or I should say alternative methods of creating power. So the state was like, no, we got to shut this down because this is too expensive. And they shut it down. And we'll see what Oklo is going to do. We're going to find out over the next 5 to 10 years. I don't know how soon they're going to have their power generating equipment, but that's what we're dealing with in today's market. Just one more sign to me that, wow, man, the bubble has got plenty of air in it. And we'll see where this lands. If this ends up being a big, awesome company, or if it ends up being worth very little. Any thoughts on Oklo?
Well, it has been on quite a run. Looks like they were a SPAC. If I was guessing based on the $10 IPO price, it was probably a SPAC.
One more reason to be concerned.
Yeah. Well, that was in 2021, but from that price, it did drop down to about 535 in 2023, and since that point, it's been don't look back. It is trading above 20, 50, and 200-day upward sloping moving averages. It has broken the 20 a couple times and come down and test the 50. It's trading about 85% above its 50-day moving average right now, so it is fairly extended. The RSI is overbought. PPO looks really strong at the moment. Accumulation looks really strong. Pretty much at a 52-week high. So it's not one for me, but for someone that likes taking on a little bit of risk, or maybe a lot of risk, depending on how you look at it, could be a fun one to ride.
Yeah, I think it's
just manage your risk if you do that.
Yeah, and it's just we're not going to get to good old revenue, good old revenue and profit, kind of like where you see thriving businesses. For example, like our friends at Reddit. It's an idea, it worked, revenue, profit, cash flow. It's there. We can see it with our own two eyes. We can see the growth rate. We can see how the trajectory of their growth. All those things are absent on this stock. What we're depending on is, hey, this is a science project, and these guys are putting it together. Hey, we're the first one to submit a license to be a company that is going to create this type of technology. Great. That doesn't mean anything. You can't sell that license. And then you have technical reports have been completed. All right. Now they're talking about licensing, not seeing a product. They're going to work with the Department of Energy. So are they going to test? So look at all the steps that remain. There's a lot of time to go. And the Manhattan Project, which was completed a long time ago, I don't remember how much money, but it was a massive amount of money that the U.S. government spent on funding that successful, project. And I think it's going to take a ton of money and a lot of time for Oklo to determine if this is going to work, because it could scientifically work, but it may not be viable. It may be, hey, it worked, but a kilowatt hour produced with natural gas or some alternative is, and I'm going to simplify it, it's $10. We have this new technology, and each kilowatt hour is $100. It's like, no, that's not going to work. Nobody's going to buy that. No one wants to pay 10 times for the power. It's not going to work. So can they economically prove that what they're doing is going to be competitive in the market? I don't know. I just see that there's a lot of risk, and people are just jumping in going, hey, I'm going to ride this trend and I'm going to make, and can I argue with them? No. If you took your stock from $70 a share to 170, congratulations. You're just investing in a different manner than I am. I look at fundamentals. I want to see that, I'll put up Reddit since I named that company. So Reddit's something that we could probably all get our heads around, right? Well, I could tell you that, and look at that, the Oklo is worth almost as much as Reddit from a market cap. But I have revenue from Reddit. Here it is, 1.6 billion, growing at 70%. Is that revenue profitable? Absolutely. Very profitable. It's 91% gross margins. They have a profit margin of 13%, free cash flow yield of 23%. So I could put my head around, hey, this is a really desirable business. They're growing, desirable, very profitable at the gross margin level, very desirable. As they get bigger, their profit margin is going to expand because they're going to have greater scale. That's what's missing out of an investment like this. And that's why I don't do it. We'll see how it goes. All right, sir, let's take a look at the market. Any last thoughts before we end the show, Darryl?
No, I'm just going to be watching for the most part this week. Things have definitely settled down over the weekend, so that's helpful. Saw a lot of turbulence on Friday, and it looks like we're recovering a bit. I still think with the extension of the markets above their moving averages, I still think they're going to be sensitive to any kind of negative news. So that's what I'm watching.
All right, so we got a late request here. I think I'm going to take a few minutes just to answer Magical Self's request. So let's take a look at Hubspot, and this stock's been sold off. Okay, what do these guys do? So Hubspot, together with its subs, provides a cloud-based customer relationship management platform for businesses in the Americas, Europe, Asia Pacific, CRM platform. So CRM, like the leader is Salesforce, and other player that's notable is ServiceNow. Those guys have really been sold off. The whole AI space, they're in love with data center. The investors in general are in love with data centers, kind of like the sellers of picks and shovels. That's where the investment's happening. But the actual, what I believe is the amount of value delivered to the economy, to companies that invest in AI, is going to be represented by companies like HubSpot or Salesforce or ServiceNow, or name that software company that provides a agentic AI application that does things for that business. And that business would then, be able to do more with the same number of employees, it grow with the same number of employees or fewer, reduce cost, right? So, but for some reason, the market's like, no, we're not quite sure if this is going to be disrupted or if they're going to grow. Well, let's see if they're growing. So it's just 23 billion in market cap. Their forward P is a little high. It's discounted according to the analyst. They are growing nicely. Pretty good revenue amount, 2.8 billion, growing at 19%. And they are doing well in the quarterly, growing 19.4 in the last quarter. Their free cash flow is good at 626. Look at these gross margins, really good gross margins. And they will be profitable at some point because that gross margin's so high as they get bigger. So their free cash flow, 626, they're growing at 20%. So this business is worth about 12 to 18 billion minus debt. So let's see if they have any debt. And they do not. They actually have a surplus of cash of 1.4 billion. So they're worth 13 to 20 billion in in overall value, and they're trading above that. So this one's going to be harder to get to this number. I can work on that and show you what I'm going to come up with, but that's where I'm thinking it's going to land. Analysts, 27 of them are looking at this stock and they think it's really discounted based on where the profits of this business are headed. Quite optimistic view on Hubspot. They're going to continue to grow nicely and their profits are going to expand. See, this is supposed to be their first profitable year, and then they're going to grow that level of profit. All right. So do you show the charts on Hubspot, and then I'll try to do a quick valuation?
Sure. So I'm looking at 3 years here, daily price chart. I added a support resistance line while Victor was speaking, and the reason I added it here is because this has been tested as support in October of 2023 and on the 13th or so of August of 2025. So it's acted as support twice and did act as resistance, and then it broke out above that resistance line and has not come back down below that line yet. So let me go out to a year. I wanted to show you why I put the support resistance line where I did. Let's go out to 1 year. It is in a downtrend, so I added this downtrend line. We did get a break above that downtrend line, but it looked to be a head fake because it did break down below that. But look how close it's getting to the support line again, which sits at about 416 or so, currently trading at 443. So we have a downward sloping 200, a downward sloping 20, a downward sloping 50. I would not be surprised if it comes down and tests this support line once more. But we're getting a pretty severe pinch point here between support and a breakout above this downward trend line. So it puts pressure and makes the market decide where they're going to price this company. Does it break down below support, which it's held several times, or is it finally going to reward this company and trade it above this trend line? That's what the market has to decide here very shortly. The RSI is sitting at 38, so that's in bearish territory. PPO is in bearish territory. I hope I said bearish territory on the RSI. If I said bullish, that was incorrect. So bearish. We've got some distribution. The money flow is currently negative, so I would not be surprised by another test of this 419, 420 level. There are definitely buyers waiting there. Let me go out just a little bit more and see how much support we have below that line. Well, it hasn't gone below it in a while. So I don't know. I would wait on this one and see if it comes back and test support here.
So when I just finished the valuation here, looking at their current revenue. Let me update my note here. And I think there's about an 11% discount, which is not great because I could buy Salesforce with a much better discount. That's a better proven company. That's for sure. It's worked. It's been working, has terrific margins, cash flows, all the above. Plus, Hubspot is a CRM company. So there's plenty of competition these guys are going to have to deal with. So it could be that they're growing really well, close to 20% right now, but that growth goes away, which would be a big risk item. So this guy's here, it's it's a neat company, but I have better alternatives within the software space. So I would not be interested in HubSpot just because there's not enough discount available, and the market has not been treating this stock kindly, as well as Salesforce and others. The growth is not, off the charts like Reddit or, another company that's just like growing 70% per year. Nope, it's not. And it's good size, but it's small. Like Salesforce is much bigger. ServiceNow is much bigger. And those guys I think ServiceNow is growing at about the same percentage, but they're much bigger. So this one here just isn't fantastic enough. And it's been sold off. The market just doesn't like it. So this one would be a pass for me. I don't agree with the analysts at 64%. My discount is much more conservative at 11%. If I consider the cash flows and even with the earnings per share, I don't know how analysts could give this company a higher P ratio than Salesforce or ServiceNow. ServiceNow is growing at the same rate, but they're much bigger. So I'm not going to give them a higher PE than ServiceNow or Salesforce. So that's my analysis there. CRUS. What does CRUS do? So this is a semiconductor company, right? So this is Fabless Semiconductor Company develops mixed signal processing solutions for audio products in China. Year to date, up 19%, flat. So it's now these guys are not in the data center. So it's not one of these super high price stocks. It's not like a Broadcom or an NVIDIA. It's not part of that gang, which is why it's only a $6 billion company. It's almost $2 billion in revenue. PE is 18.5 and then 17.6 for the next year. The growth is not very impressive. They're just barely growing. Okay. And a lot of semiconductor companies are growing. Even things that are not plugged into the data center like Qualcomm. Qualcomm's growing really well. These guys are not. Free cash flow, $457 million. Gross margins are okay. Not good, not great, just okay. This is kind of an established company that is in the semiconductor space, but not part of any of the big, exciting, developments in the space. Analysts think that it's fairly priced, and they think that the revenue is just not going to really do much. You're going to have a flat year in 26, grow a little bit in 27, contract a little bit in 28. So this isn't going to catch a lot of investing because there are a lot of investors because it's in China and it's not growing and it's not in the data center. So this is going to be a kind of I don't know if this is going to rally. Well, it'd be the reason why it would rally, right? So this offers audio products, amplifiers, integrated analog converters, okay. Yeah, so this is all like for things that it's going to go into laptops, VR headsets. It's for consumer products. And that might be okay. It might do okay. It's just not going to grow like, things that you're seeing in the data center. Looking at the stock, $610 billion market cap. I'm going to look at their debt level, but before that, 457. So they're going to be worth $4.6 to $7 billion in market cap and minus debt. And they don't have debt because they have $614 million of cash. So these guys are worth 5 to 7 billion and they're priced at 6 billion. So it's not good enough. There's no story to help it. Like, why is it going to go up? There's no big story that's going to help it. It's in China. As soon as you say China, you have to discount the stock by 25, 40%. So it would be a pass for me on Series Logic. Too small, isn't catching any tailwinds from a story. And I would be afraid my capital is just going to be sitting there for a while. Any comments on Series Logic?
Yeah, I was getting prepared for the question I saw for me, but let me get back over here. So this is, I hate it when it does that. It's trading in a range and has since the end of 2024 from about 126. And I'm going to exclude the tariff related, so down to 98. So it's been trading in a range there. So pretty much consolidating. The RSI is negative. Looks to be improving slightly today. The PPO is positive, bullish territory. It is an accumulation, a little bit of distribution here the last week or so, and money flow is positive. It did come down on Friday and test the 50-day moving average. It's trading slightly above that today, but below the 20-day. And the 200-day is upward sloping now after at least since February. It's been in a downcline. It looks like it leveled out in August and is slightly improving at the moment. So I don't have any thoughts on this one. This is not a company that I watch or care about. So
Thanks for
you'll have
doing
to
that.
decide what you're going to do with it.
Switching gears, are you in a place where you can look at the question that little J has?
Yep.
If you're still in the CKRE play.
Yep. So let me go to my trade. It's currently, I'm in the red on it a little bit. The put I bought at 64 paid me $4.35. So that's my break even if I subtract 435 from 64. So I'm about $163 below that. And then on my call, I'm in the hole on that $272 or 23%. But I'm sticking with it, and I will show you why. I knew when I bought this that October was going to be slightly weak. So Friday would have been a great time to execute. But down here on the Williams cycle forecast, which is not one I typically show or rely on, but I like to look at this one and say, okay, we're trading about right here. And then look where my cursor is. I'm going to set it right there. And do you see the upside based on cyclical pricing of the KRE? It is pretty much up and to the right. I expect this to become profitable sometime in November, but October could be a relatively weak month. So I could have waited to buy this one. That would have probably been a little better. But I think the banks, I wanted to buy them before they started issuing earnings, which is going to start this week. So this is a regional bank. This is not the big banks. This is regional banks. But they're going to start pouring in here. And I want to be there before those earnings happen, because that could change the complexion of this cyclical forecast. So that's my story, and I'm sticking to it. And keep me honest.
No, good stuff. Investing's difficult, and I appreciate you sharing with us what you're doing there.
Yeah,
right.
little Jay will keep me honest here.
So I'm going to do a quick flyby on the last two questions. So sorry if I just have to fly by. I did see the Bloom Energy is having a big day because everything in that data center, these guys produce fuel cells for energy production at a generator. Great. So $26 billion, $25 billion business, revenues 1.6. So you're paying 18 times revenue, or approximately maybe 19 times. PE ratio is only 1,060. Haha. Forward PE 210. And what's interesting is, hey, wow, we're going to sell lots of these things. Yeah, cool. How much money do we make on them? Not much. So they're having a booming year, making gross margins of 30%, profit margins of 1.45%. That's horrible. That's terrible. Like, I don't want to own that business, but a lot of people do. So good luck with that, everybody. That is in Bloom Energy. You just have to be a gigantic company like Walmart at $600 billion to really make a lot of money because your margins are so bad. So Bloom Energy is interesting. Everything in the data center, energy production for the data center, you automatically get a high stock price, it seems. And the last question is going to be XP. Let's do a flyby. XP was a stock. They do financial products and services in Brazil. And I was nervous about this company. I was like, to have an investment in Brazil, it just, I got to have more confidence in them. And I just didn't have it. And this stock has sold off recently. It's doing 35%, but I kind of kept myself out of this stock because, let's see, the revenue growth is not incredible. It's just okay. And is this Brazilian currency? Yeah. So this is a Brazilian currency. I'm not quite sure how many US dollars, but this one here, I just don't have a ton of confidence in. And given the current conditions where stocks really sold off on Friday, this one has really sold off in the last week. I'm going to keep myself out of this stock. I've got enough risk, and this one here, just I wasn't totally confident in as I've reviewed it over the last year or so, and I'm glad I kept myself out of it. The PE ratio is nice and low, but the revenue growth is not like, wow, incredible. And I'd rather just stick to within Latin America. Mercado Libre is going to be my go-to, and Ternium, which is more of a steel producer. And that's going to be my play in Latin America. So thanks for asking about that, Tomas. And then a couple last questions here. It just depends. It depends on how much money do I put into a particular stock. It's how much conviction do I have in that stock? How much confidence do I have on their future prospects? How big is their addressable market? How discounted are they currently? It's all about confidence. And most of my big stocks are very proven stocks like Meta, Google Alphabet, Amazon, Uber. Robinhood is less proven, but it's gotten to a big size in my portfolio by appreciating so much. So my investment has been really, really small in Robinhood, but now it's created a big position. So that's what goes into that decision. It's not a mathematical kind of process where, hey, just divide everything by 40 and that's your position. Nope. It's really a thought out qualitative kind of decision process. All right. And I think you're sharing a link here. Here is your link to your YouTube channel, right? Did you want to say something there?
Well, Canal asked, my name's Darryl, not Darren if you're referring to me. And you have to strike the word genius out of there. I'm learning just like everyone else on the technicals. So I do my best. I enjoy doing technicals. I have a long history throughout my work career of charting and data analysis. And when I retired, stocks became my new data analysis tool. So I've got a lot to learn, and hopefully I can teach a little bit as I go along. So
Yeah,
thank you.
Thank you, Darryl. Appreciate you. Thanks for covering everything. All right, that's it, everybody. We will call it a live stream. We'll be back on at the same time on Wednesday, and we'll have a lot to talk about because we have some earnings that are going to be released that morning. So we'll be able to talk about those earnings and what's going on with the stock market. In the meantime, good luck, everybody. Hopefully, the stock market keeps these gains. It'll be kind of scary if it sells off again, because I think Friday would have like kicked off something that was probably brewing, and investors wanted to get out of the market, maybe take some profits. Not saying it's going to happen, but we'll see. I'm going to give this market a couple of days to tell me what it's going to do this week, and I'll be watching. So thanks again for tuning in. Everybody have a great day. Thanks, Darryl.
Thank you. Thanks, everyone.